Tom Lee, everybody's favorite bull. Tom Lee's out there here today. I want to go ahead and react to this one here today on what Tom Lee's opinion is on the market, kind of what we got moving forward, all that little fun stuff, okay? And then I want to react to this one. Morgan Stanley switched their top pick from AMD to NVIDIA, so I want to hear what they're saying here. Are they saying buy NVIDIA, right? If they are, that's a very bold call. So I want to react to that one. Hope you guys enjoy this as always. Let's just jump straight into this. Thank you, everybody that's subscribed to the channel. Thank you for being here. I believe we're over 29,000 subscribers now at this point in time, or really close. So I appreciate y'all being here as always, and let's just jump in.
Tom Lee, he's the head of research and a managing partner at Fundstrat, also a CNBC contributor. Tom, it's great to have you here at Post 9.
Great to see you all.
All right, so you got a new note out today. I want to make sure I point out, you are the biggest bull on the street. S&P target of 4,700, about a 6% upside from where we are right now. Next closest BMO, only a 2.5% rise. You put out this.
That's pretty crazy to think, because at a while ago that seemed insane, and now to think 6% away, like now it seems doable, right? That's fascinating.
Today saying that we're not seeing the normal Fed playbook with their tightening cycle. This is an inflation war. How does that shape, or how should it shape investors' view of the rally that we're seeing and your outlook for the rest of the year?
Well, I think that there's two things the market sort of framework I think is changing, and that's why there's momentum in stocks. The first is, I think too many economists think this is a traditional business cycle, Fed cycle, tighten until you break the economy. But it's really an inflation war, and the Fed will slow down or even stop when inflation expectations break. We got the UMich one-year inflation survey today. I don't know if people saw it. 3.3%. That's an utter collapse in consumer expectations of inflation. I mean, just utter collapse. So I think the Fed's is done a lot sooner than people realize.
So does that change the rules of engagement when you're looking at this market and where to put money, or maybe even pull or trim?
By the way, my opinion is the Fed is done. The Fed is done. I mean, when you have CPI coming down the way it's coming down, the next CPI report will likely be extremely low threes, potential of high twos. There's no need. Like the Fed would just prove they have no clue what's going on if they raise rates again anymore at this point in time. Unless you see inflation spike back up to, let's call it high fours, fives, something like that, then you have something to worry about. But based upon the trends that we have going on and just, this continued deceleration of CPI, there's no reason to keep raising rates when Fed funds rates 5% plus right now.
Yes, a couple things. If you look at past inflation wars, when the inflation war is over, strangely enough, the market pins itself to the original level, meaning like 82, you saw the stock market recover the entire 27-month bear market in 4 months. And I think what we're seeing today is the stock market is trying to pin itself back to 4,800, led by cyclicals, because these companies survived an inflation war, and they've been battle tested. But I think the second thing that people have been sort of expecting, widely held, is a recession. But instead of us falling into a recession, we're actually slipping into an expansion. I mean, look at Q2 earnings. X energy, it's up year over year, the first time in 6 quarters. So I think earnings have bottomed. Jack Gorman at Morgan Stanley said the same thing at a conference talking to all the CEOs, his gut feels that the economy's bottomed. So we have an inflation trajectory that could get the Fed to cool off, and we have an expansion. That's an early cycle trade that we see the old highs.
You also put out some fresh money ideas. In this group, you are looking at tech, but it's not the tech.
In terms of expansion, I definitely see that playing out right now and into the back half of the year. But I'm not so convinced. A lot of people, even the guy Morgan Stanley we reacted to last night, Mike Wilson, the biggest bear, he's convinced it's going to be great times for 2024, 2025. I'm not actually that confident. I kind of want to see how things play out here. I think there's still risk out there for 24, 25. I wouldn't go, full on everything's going to the moon. We have nothing to worry about. I think there's still a lot of worries. And so I would just, caution people. And that's why I'm preaching, stay hedged out there, stay hedged, make some hedges, get ready for 24 just in case. Obviously, we've had a big boom time in construction. That's really held us over because all these construction projects, homes being built, apartments, stadiums, all this stuff. It's been phenomenal, right? Because of the low interest rate environment. But these projects, we're all starting in a much lower interest rate environment. And we're going to have to see, does that continue in a higher interest rate environment, at least in the short term here, which short term I really mean over the next 6 to 12 months. And if we continue to see a major slowdown in new construction, What does that end up adding up to in the back half of 24 as you go into 25 and things like that? So, that's why I would excuse to say I'm cautiously optimistic. I'm not full bull like many of these other folks are.
Talking about those 7 names, I'm talking Cisco, Juniper, names like that. Why are you feeling bullish about names like that right now in the tech space, but outside the AI plays?
Our number one sector pick remains FANG, and we're recommending people look at the laggards of the FANG, but that's not necessarily easy, as Josh was saying, to put a huge allocation to work. There is a lot of evidence the market's broadening, and I think pretty adjacent to a lot of the talk about AI is comm equipment. And so that's why we've listed names like Motorola and Cisco and F5. But at the same time, the consumer discretionary space really benefits from a broadening market and also an inflation war that's being won, and that's why we highlighted the airlines.
Is it also a valuation story? I mean, I'm looking at Cisco's valuation, 13 times forward earning, Juniper, 14 times forward earning in that space. Are these, below the trend valuations? Does that make this play more attractive in your mind, or is it the business itself?
It's a little bit of both, Frank, because, I don't want to discourage anyone. When you have a secular story, you don't want to be valuation sensitive. So no one should really be disputing the PEs of an AI play. But when you think of allocated dollars and CapEx to AI that Cisco is going to capture, if they can have sustained growth, the multiple is going to go up towards 20 or 30. So there's a multiple expansion story on top of an earnings story.
So as I said, you're the biggest bull in the street. S&P target of 4,700. Any thoughts about raising it?
We could raise it if breadth is expanding. I mean, I think one thing we're watching is the small caps. Josh is pointing out they are starting to participate. But, though, of course, investors need to be wary that nothing goes straight up. So I think there is a chance, of course, a window where there could be a tactical pullback. I mean, maybe it's going to be caused by the VIX or some other stumble. And we would just, I think it's more important for the viewers to know that that's a dip they need to buy instead of thinking it's a top.
A stumble, then it goes back up again.
Yes.
All right. Tom Lee of Fundstrat. Tom, thank you so much for being here at Post 9.
Yeah, if I was in his shoes, I'd keep it at 4,700. Don't worry about raising your end of year, S&P 500 target. Keep it 4,700. You're looking pretty decent right now. Why go ahead and throw out, 5,000 or 4,900 or something like that, and then the best case scenario is the year ends, let's say we're a little above 4,700, and you say, look, all you guys said I was way too big of a bull, and it ended the year a little above my price target. So if I was Tom Lee, don't mess around with that price target unless you really need some, everybody to talk about you and say, oh my gosh, Tom Lee just made his price target to 5,000 or something like that. Keep it 4,700, man. It looks good. If we finish the year somewhere around there, you look like a genius. And you don't want to be moving up to 5,000 and the market drops down, and next thing you know, we end the year at 4,100 or 4,200 or something like that. All right, next one up here. Here's why Morgan Stanley switched top pick from AMD to NVIDIA. Are they saying buy NVIDIA here? This is intriguing.
Our attention this morning, Morgan Stanley shifting their top pick from AMD to NVIDIA, noting that NVIDIA is likely to be the only company to beat and raise in 2023 due to AI, but they are bullish on the AI space beyond this year, raising price targets for both names along with Marvell and Intel. The analyst behind that call joins us now, Morgan Stanley's Joseph Moore. Joseph, great to have you with us.
Great, thank you.
NVIDIA is your top pick, and it happens to coincide on a day when NVIDIA makes a fresh record high. You see $500 for the price target. What would you say to those who question the valuation? They don't question whether or not NVIDIA deserves to have a premium multiple. They don't question that NVIDIA is currently winning the AI race. They just simply question how much of a premium it should trade at.
Yeah, I think it's been an amazing move. I think I've covered the stock since the IPO, and seeing it at $1 trillion valuation, it takes some getting used to.
The man's been around a while. Good for him.
We're also seeing the strength of business that's unprecedented, both what we saw in the last quarter, what we've seen since then. We continue to hear about new big orders from customers that weren't on the customer list 3 months ago, from governments, from enterprise spending, which are smaller increments than what we see in cloud. Still pretty significant. We're just seeing real strength in the business. And so I think these numbers can keep going up. And what's really remarkable about this is it's happening in a constrained budgetary environment. So cloud CapEx budgets aren't really going up. We're just seeing a pivot away from traditional legacy spending towards AI. And that's why we make the comment that...
All right, so he's got NVIDIA going to $500 here, AMD 100, Yeah, he's got to go into 500. AMD 138, Marvell, Intel. So how does NVIDIA get to 500? I'll tell you exactly how Intel ain't getting to 500. How does NVIDIA get to 500? Okay. I even see a scenario where Intel actually could be well above 500 by the end of the year. And I don't even own NVIDIA stock, by the way. But how it would get there is if they put up the sort of numbers that they're talking about, 60% plus revenue growth, especially if they come in and beat that, that's when a lot of these bears and people, there's still a lot of people, and they might be delusional, but there's still a lot of people that believe that NVIDIA was lying about the numbers. Lying, okay? And NVIDIA's just, making this up and they're talking crazy and, they're not going to do 11 billion, they're going to do 8 billion, 9 billion. I still hear people with big platforms talking like that, okay? These individuals are talking like that. What happens when the numbers get put in your face? And then they're like, yeah, we did growth 60% plus. And our EPS is up a whole lot more than that. And guess what? Next quarter, it's going to be even better. When that happens, folks, all those other bears out there all go away. And people that have been on the sideline, the longs that are considering either buying more shares of NVIDIA or buying it for the first time, once they get the concrete proof that the numbers are there, folks, that's when you get a next level of kind of buying pressure there. So if you're talking about NVIDIA $500 or above $500, that's exactly how you get there. Put up the numbers.
There's one company where numbers are going up because everybody else, even though they're all nicely levered to AI, they still have exposure to the traditional server business, which has some downside. So, a lot of strength in the business. I agree it's a premium valuation, always has been, but it's really a unique situation that in 30 years, I've not seen something pivot in this direction with such speed. I mean, 4 months ago, you had the company was kind of another company that was dealing with sort of budgetary pressures and things like that. Suddenly now they're seeing this kind of surge. It's pretty spectacular.
Yeah, well, I note in your note, you say that our industry contacts are reporting daily new orders from customers that were not contemplated as major customers until now. Can you give us some sense as to what you're talking about there?
Sure. I mean, when we first upgraded the stock in March, we sort of had a reference point of, growing this data center business to $40 billion in 3 years. We were thinking that would mostly come from cloud customers, traditional big scale cloud customers. And the growth would come not from more people investing in these models, but from growth in complexity in the models, from more vertically attenuated models, from translation of those models into other languages, things like that. What we're seeing instead is a significant breadth where we're seeing, companies that are in the applications development world that we would have thought would be developing these models in cloud or using models that were developed in cloud, instead developing their own models. We are seeing governments sort of have significant new activity here. So I think there's just a number of places where we're seeing the number of models for something that's very capital intensive like this, that's really broadening out quickly. And that's why, the business was as strong as it was, when they guided July, and everything we hear is that, it continues to get stronger.
Wow. Yeah, it's fascinating, man. It's really fascinating to see this NVIDIA. And if you guys missed, I think it was either the main channel video I put out. Yeah, it was a main channel video. I think it was yesterday or the day before. And I spoke a little bit about NVIDIA, and I said, this is a foundation company. And for all these other companies, the important thing to remember, very important, is NVIDIA is going to make bank off of all the AI infrastructure here over the next couple years. But all the other players that have these businesses that are going to be helped immensely from AI, they're going to see much more of a benefit really like in the back half of this year, but really next year, the following year, as they continue to build out their services. But you need that foundation there first, and NVIDIA provides that foundation. And so they're the first ones to benefit. Before anybody else benefits, NVIDIA benefits. Then it's going to start branching out more and more, and then you're going to see it in more and more companies' numbers where, oh yeah, we thought we were going to grow 15%, we're actually growing 25%, 30%, and you'll see it kind of broaden out from there, and so that's going to be pretty exciting stuff. Appreciate everybody joining me. As always, folks, thanks for being subscribed. New all-time high subscribers. Also, I just made the moves in the Patreon portfolio. Make sure you get in there. That's going to be pinned comment down there. I just bought 2 stocks here today, 2 growth stocks it is, and you get to see, obviously, the moves I'm making in that portfolio every single week. It's a no-brainer. Make sure you join us in there. That's going to be pinned comment down there. Much love, and have a great day.